Hello, my name is Ogie. I'm so sorry, I did the first one, but it wasn't actually recording. So I have here for you the first stage is what is an ask and bid price in the forex market. Okay, a bid price is the price that the market is actually offering you, while the ask price is the price that you actually enter the market. Now, example is when you want to buy a goods, let's assume you're going to buy a market of wholesale and you like to buy a market of like $50 and the market is presenting you for that goods for $50, but you want to price it down to $40, right? So you are the ask price is actually $50, but now you're bidding it, sorry, your the bid price is actually $50, but you're asking for that price to be $40. And when you actually they give you the price, the difference between the ask and the bid price, what they call the spread, that's the commission of the broker. So the price, example you're buying let's assume you're buying a flax and the flax is for $50 and you want to buy it for $40. So the bid price is $50, but you're asking for that price to be $40. That's the simplest way I can actually explain the ask and the bid price in the market. So moving to the next page. So this is it. The bid price, I'm going to give you the definition here. The bid price is the price a forex trader is willing to sell a currency pair. I just said that. What the trader is giving you the price, like the bread or flax you want to buy. I'm telling you it's $50. That's what the bid price is. The market is actually offering you that price. That's the bid price, the price a forex trader is going to sell a currency pair, giving it to you, while the ask price is the price a trader is willing to buy a currency pair. So you want to pay 40 for what is being offered to you for 50. Do you understand? So the difference between both sections is actually what they call spread. Difference between the bid price and the ask price is what we actually call spread. I hope this has been very explanatory where I broke it down. So we have the candlestick, the buy and the sell candle. Now the green candle here, you can see we have the low and we have the high section. The markets, the price opened under here, where we see open, that's where the price opened. We have the full body, that's where the money is. And we have the closing of price up here. So when you see this particular situation happening, this is what they call a buy candle. Opening from under and closing on top is what we call a buy candle. Then if you want to see a sell candle, you can see the high and the low. There's no difference in the high and the low, but you can see the opening is actually different in the sell candle. We have on top here, we have the sell here, and it's closing under. Do you see the opening of the sell candle is starting from here up here and closing under? So this is a sell candle. When it's going down, is opening from up to down is a sell candle. When the candle opens from down to up, it's what we call the buy candle. You can see it here. So this whole body you're seeing here is actually money. Okay, so the next part here is price action. In the price action, we have three categories. We have the uptrend, we have the consolidation, and we have the downtrend. Now the uptrend, you can see it's the higher high, higher low, higher high, higher low, higher high, higher low, higher high, like that. Now, remember I told you in the previous chapter that when you see a candle opening from down and closing on top is a buy candle. So this is our buy candle momentum. So this is the uptrend, meaning the market's actually buying, uptrend momentum. Then you see a consolidation. A consolidation do not have any movement. The high, the low, the high, there's no direction. So we do not even know where the market is actually moving. It's just in a range. No high or low. There's no any break of structure in that section. So we call it the consolidation because there is no direction. But in an uptrend, there's a break of structure. A structure was being broken here, but we'll get to that section in the next video. But that's how it is. We have a structure being broken. See a structure being broken here, and that's how we go for higher high. Then for a low downtrend, we see it a lower low, lower highs and lower low, lower high. It broke a structure here, lower low, lower high, lower low, broke a structure at the lower low, lower high, broke a structure at the lower low. Don't forget I told you the candle for a sell opens on top and closes under, opens on top and closes under. But this is a downtrend momentum. It always involves the breaking of a structure. Be very conscious of that. A structure must be broken for you to know the trend of the market. So I'm going to the next chapter now. So we have the support and resistance. I love this part because I love explaining it very, very well. Now, when you're standing on the floor, right? The floor you stand on is what we call a support. You're resting on the floor is what we call support, right? But when you're standing up and you try to jump, and you jump and touch your ceiling on top of your house, your ceiling, what happens? It pushes you down, right? Now, in a support, buy takes place. When market gets to a support, a buy takes place. When market gets to a resistance, a sell takes place. So when you're going to your support of the trend on the market, be expecting a buy. And when you get to a resistance in the market, be expecting a sell. So anytime you get to, I call this support, I usually call it floor, and I call the resistance a ceiling. When market gets to support, market must buy. And when market gets to resistance, market must sell. Now, when market breaks the resistance, it's always come back to test that resistance at its new support. Example, when let's assume some bricklayer come to your house, this building builders, and they break the ceiling of your house to move into the next building on top, right? You know they have to balance on the floor on the top building. That becomes the new support. I hope I made this very simple for you to understand. So use an example of the floor is your support and the ceiling is a resistance. When market gets to the support, market has to buy. When it gets to the resistance, market has to sell. So I'm moving to the next chapter now. Then market analysis. So we have the technical, the fundamental, and the sentimental analysis. Technical analysis has to do with the uptrend and downtrend, the higher high, the higher low, the patterns of the market, the structure, the consolidation, uptrend, downtrend, whether the market is actually in a bullish or a bearish momentum, how to enter. We analyze everything from the monthly to the daily, from the monthly to the weekly to the daily to the 4 hours to the 30 minutes, 15 minutes, 1 minute. It depends on the kind of trader that you are. Then we have the fundamentals. Fundamentals are those that actually watch news. Yes, you must always watch news to check when some pairs are having this red signal or very high effect that will actually affect your trade. Some kind of news to affect the trades that we trade. So you have to be very conscious. Some people actually specializes in trading fundamentals, but many of the traders that I've met to focus more on technical, then add the fundamental just to be conscious when there's high rates news. They avoid the markets when the market is actually on the low rates, like the news doesn't have much impact in the market, you can actually trade. And we have what we call the sentimental. Sentimental traders are the ones that look at the economy of that country, the economy of the country of the pair that are trading, and they analyze it, the situation of the market. They are the investors. They look at how the market is based on the economy of the market. So this is the whole analysis, the whole summary of the whole video. I try to make it as short and sweet as possible, and I hope you guys enjoy the content in this. I hope the next video is going to be more explanatory and more interesting to actually view. If you do not understand, kindly comment on the comment section and I'll explain again in the new video. And if you would like me to explain more new videos, kind of topics you're finding difficulty in, kindly put on the comment section too, and I'll actually explain that section. Thank you.